Hi, how are you? I'm going to talk now about the Robinhood style social media investing that has been grabbing the media headlines. My discussion will last roughly 7 minutes. In brief, I think this is going to be could contribute to a global political crisis because I think this kind of buying frenzy, not based on buying fundamental value, not based on any kind of research of fundamental value, is going to create a lot of problems for us. This is really more like a sort of internet gaming on a massive scale. And losses are inevitable. And when these losses become widespread, we'll see an explosion of anger among these large numbers of small investors who are participating, day traders, small investors. We could even see a return of the Occupy Wall Street protest movement that first came several years ago. And then when you have this kind of huge anger in the public domain, politicians are going to get involved, and central bankers will find it very difficult to raise interest rates even when that becomes necessary because they'll be held hostage by the need to appease the crowds. Governments too could be held back because it will be difficult to cut back on subsidies for business and ordinary people. What will be the result? I think if it continues and become a really bad case scenario, the net result will be that some countries could become ungovernable. You're going to see rising debts, money printing, and erosion of the purchasing value of paper currency. And you might well get runaway inflation. So, as I said, this is a very much a bad case or worst case scenario, but I think there is a risk it could really happen. The underlying issue is the same. It's been the case for quite a number of years, which is frustration and widespread jealousy over stagnant incomes and growing wealth accumulation by a privileged few. In mature economies, the lack of growth drivers is creating what amounts to a systemic crisis. So the Robinhood mania on internet is just the latest manifestation of small guys getting together to try to attack the elite. Now, I think probably the authorities all over the world are well aware of this. I assume they're trying to find ways to calm down the situation, but it won't be easy because of the power of social media and the madness of crowds. Here in Asia, we may have some advantage because we have a long tradition of strong governments. We pride ourselves on our greater social discipline. And in a majority of Asian countries, stock markets are monopoly corporations, so they are much easier to control. What we need to do here is that we need to find the right balance between letting markets trade freely while avoiding excesses that could be disruptive on a national scale. So a majority of Asian markets are relatively smaller, less liquid, and in a way, this is a blessing because it gives less scope for this kind of maniac buying frenzies. It's also easier in some Asian countries, maybe a majority, to impose controls on the internet if need be. But having said all that, generally speaking, I can see a continuing erosion of confidence among investors in the medium-term outlook, arising from social tensions, political risks, and bubbles in the stock market. Although, of course, I would agree that in the short term, everyone is having a good time, and the profit potential seems to remain good because of the bubble of abundant liquidity. Still, people really are looking for insurance already. It's no surprise to me that asset classes that can allow you to gain some kind of insurance against the debasement of paper currency and runaway inflation, these asset classes are in demand. So for example, gold is up 16% and Bitcoin is up more than 200% over the last 12 months. These are insurance assets in a way. And I think that hard currencies, including commodities, food products, real estate in attractive locations could also be in demand. Then you look at countries and geographies. I think one unsurprising winner is the renminbi, the Chinese currency, which has gained 8% against the US dollar over the past 6 months. Simply put, mainland China is emerging and looking attractive as a haven for global investors seeking to hedge against rising risks. That's because Beijing's emphasis all along has been on social and financial stability. This has been going on for quite a number of years. Of course, during the height of the pandemic on the Chinese mainland last year, the Chinese government did take some measures to stimulate the economy, but those were not excessive. And now that a V-shaped recovery has been achieved, the authorities are tightening up again on their policies because what they really want is smooth situation, no instability. So they have kept interest rates relatively higher than some other parts of the world. 10-year Chinese government treasury is yielding more than 3% compared to just over 1% for US government 10-year treasury bonds. In China too, wealth disparity has been a worry. But in China, it seems the problem is not quite so worrying. The government seems to have a grip on it. Restrictions have been imposed on real estate transactions to discourage speculators, and the economy is still growing. So if people have a stake in the stability of the society, based on official statistics, poverty was eliminated on the Chinese mainland last year, which is a remarkable achievement, considering that as recently as the early 1960s, some people were still starving in China. And in China, we now have a middle-class population of more than 400 million, and it's growing very quickly. This number of 400 million or so will double by 2035, according to various projections. The authorities too have shown growing awareness of the power of social media, and they are tightening controls on the country's internet giants. As a professional investor, I would say that I am definitely very worried by the Robinhood mania and other continuous manifestations of social and political dislocations caused by a world that is increasingly divided between a privileged few and the majority of people who face stagnant incomes and deep frustrations. And I also think that the professional investors like me, we are very interested in trying to find different ways to get insurance to hedge against the growing risks. I think this can include, as I mentioned, gold, perhaps, hard commodities, assets related to the China story, etc. I would also say that probably various authorities are quietly looking at ways to calm down the Robinhood phenomenon, but I do not know what the next thing will be, because this problem of deep social divide isn't going to go away. So we have to continue watching it very carefully. Thank you.